What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 26th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we have got to spend some time chatting about what has to be not only some of the most bullish, but crazy price action we have seen in Bitcoin in a very long time. And that was what we've seen over the last 24 to 48 hours, where Bitcoin saw a 42% rise in price in a matter of just a couple of hours. We can see here with the date and time range here, we can measure a 42% rally from the general bottom to top here. Now, this is an absolutely crazy amount of price action. I think a lot of you out there might be curious as to what caused this. And along with that as well, I do appreciate your guys' patience. I've been traveling here. I'm actually now in Las Vegas at the moment, so I wasn't able to do any video last night or this morning. But I do want to do it today and try to provide as much of an understanding as I can, with something that really didn't make much sense at the time, I think, to a lot of people. So this is the daily chart right now, and we can obviously see it doesn't matter what exchange you're looking at. Across some exchanges, it was some of the most volume we've seen in months. For the general market, though, this was the biggest amount of buy-side activity we've seen throughout this entire decline in Bitcoin's price, and it came much faster than we were anticipating. So what really happened? Well, a lot of people are going to hint the first piece of news that really drove this buy session as being the comments from President Xi, who is the president of China. And there were supposed comments that he was talking about seizing the opportunity of, instilling blockchain innovation inside of China, really being the world leader of blockchain technology. Now, to a lot of people, this would be a justifiable explanation, and no doubt, big, world leaders like this talking positively or negative about crypto will possibly have some sort of effect. And I have no doubt that it probably did lead some people to buying into Bitcoin. Now, the news itself doesn't provide much justification for Bitcoin going up because, as we all likely know, there's a good separation between blockchain and Bitcoin. And the use case of blockchain for China in this case is much more towards corporate use case, enterprise use case, and probably much more in line with the things that China is known for, which is tracking and tracing just about everything within day-to-day life, the smart economy, and a little bit of a surveillance state, right? So I don't think in this case it has to do with building virtual currencies. In fact, China does not like Bitcoin. It does not like cryptos because outside of money going in and basically laundering into foreign real estate, it's the next best thing for people to get money out of the country. I think we all know that, to be fair. And honestly, I don't think it's a bad thing, but it's the truth. And China does not like that, right? So I don't think this was just it alone. I think this was the match that sparked the fire. And what we really saw yesterday that led to this kind of parabolic run-up in price, this crazy exponential rally where right when you think the high has been set in, price pushes sideways and continues higher and goes absolutely vertical. It has to do with something we've talked about on the channel and has been a classic example of why cryptocurrency markets are a favorite for traders. And it's what's known as a short squeeze, okay? So what is a short squeeze at the end of the day? Well, I'm going to go ahead, I'll pull up a part of the article here and we'll dive into this a little bit to talk about it. But to just kind of give you a brief overview for this, you may not know, a short squeeze is basically when you're liquidating positions of people who are betting against the price of Bitcoin, right? So if you're long a trade, if you're bullish, you're obviously riding to the upside. You're hoping that Bitcoin goes to 10,000 and above, and you're going to make hopefully money on your investment in this case, or maybe you're just holding it for the long term, right? And there's also other people on some exchanges on what's known as derivative platforms that allow them to be able to bet against Bitcoin's price. So if Bitcoin goes down, they can actually make money, right? So it's the opposite of going long. And what we saw was on BitMEX and a lot of these derivatives platforms where a good amount of the overall volume in cryptocurrency markets are done through, that a lot of people were overpositioned to the downside. There was an overall bearish sentiment in markets. I mean, you saw the people talking so confidently about how Bitcoin was going to $6,000 or $5,000 and that Bitcoin was a dead or failed project. So when you have this combination of enough liquidations, what happens is that people have to cover their positions, and it inevitably leads into what's known as a short squeeze. It basically leads to the price accelerating, clearing through the shorts, and it almost spawns a domino effect. And the thing about it alone there's a few combinations here that make cryptocurrencies as a market so susceptible to short squeezes. First one is that it's a very small market. We're very early on in this revolution of cryptocurrencies. We're about a 200 something billion-dollar market. It's very easy for volatile moves to already come into the upside or downside. The second thing to keep in mind is that, as I mentioned before, the vast majority of volume out there is happening very much on derivatives platforms, right? There's a lot of fake volume in cryptocurrency markets on spot exchanges. If you take between Coinbase, Binance, Poloniex, I guess you'd say Kraken and Bitstamp and Gemini, outside of those, there's really not much other volume in the world, maybe in a few other Korean exchanges. And when you take a look at the volumes that are done on BitMEX, it's just about equal. And that's not normal for most markets to see that much on derivatives platforms. The amount of margin trading as a percentage of spot market trading, it's pretty big. And the third thing to take into mind as well, and this is something that I think is funny, it speaks to the human nature of markets, is that there's obviously a sense of FOMO and FUD, especially in crypto markets that are still very human driven and are still very early on. And one of the things that I think was quite hilarious was Edward Snowden, the NSA whistleblower, put out a tweet hinting towards a photo from a pretty well-known anime. And this photo got a lot of people interested during the movement of Bitcoin, got around 35,000 likes, 8,700 retweets. And this came at a time when obviously Bitcoin is moving. And this has been a very tractable meme in crypto Twitter, which basically was is saying, screen cap this, here are my price predictions. And it's some random person, no name, we don't know who they are, on 4chan basically putting this out. And basically saying that by October of 2019, which we've only got a few more days, that Bitcoin's price is going to be $16,000. So you have all these things coming in, right? This kind of feeling of like, oh my God, there's something I don't know that Edward Snowden knows. And there's also, prices just accelerating like crazy. And maybe there's a short squeeze going on. And President Z is saying this about Bitcoin. And when you have all these things come in combination, you can get these crazy, completely irrational rallies, right? I guess, I've learned about the term rational, right? Everyone's just acting in their own rational best interest, but things that seem irrational, if we're using the general subjective term of rationality, right? So that's the gist, guys. That's why Bitcoin moved like it has, and it's why Bitcoin, after going to 10,500, easily clearing through the $10,000 mark, is now back down around 9,100. Now, let's go ahead and be clear about one thing, guys. I know some of you want me to try to do TA on this and tell you guys where we're going, but I'll be fair. I don't know. And to be fair, when I look at this daily chart, it's a very wonky chart. To have this tall of a wicks on a candle does not look very good. Nonetheless, the day is not over. It could recover. We could get a close and then another daily candle that makes up that price action, accelerates just as quick. Who knows? But this is something, there's something much more important that I want to focus on, right? Because I've told you guys anything past a 30 to 40% correction is what I'm adding. And we're still at a 35% correction point. And I want to speak more to a lesson that we talked about the other day. That this whole period here, right? I did get a lot of criticism, and I think many other people did as well, of being, bullish at these corrective periods, right? And not to mention, to be fair, as we talked about, there was a lot of things that were making markets concerned. The break below the 200-day, the correction being a little bit more stark than usual. We can see we had a 47% correction on this pullback. I understand the fear, guys. It's very easy to lose faith in something when it drops 47%, especially if you happen to average in or buy near the highs up there. I can understand that emotional feeling. But the problem for so many traders that I see is that they're continuously caught up in the current emotional state. It is not always, but it is tended to be that it is good to be a contrarian to the average emotional response in markets, meaning that when people are fearful, you get greedy. When people are getting greedy, you get fearful. You start locking in profits. You start taking out positions in the market and waiting for that retracement, right? So that's the general point I want to draw across, guys. So many people missed out on this rally because they weren't positioned in the market. They got completely out. They lost faith in it. And I think, there's people who I admire in this space. There's Bob Lucas, a lot of other people who have these kind of long-term views in the market. But I've always believed in the philosophy of not letting the short-term cloud your vision. I put a good tweet out, I think, yesterday. If you guys want to take a look at it, we'll take a look at it in the video here. But the major point that I made, right, is focusing on the long-term price action here. If you let your short-term emotional reaction decide your trading investments, I not only say this market is not for you, but along with that as well, you're missing the point of what crypto is all about, right? The sheer fact that Bitcoin has a finite set of basically coins that are going to be in supply, that you have, basically a limited supply of censorship-resistant store of value in the world. This is why you can see moves like this, right? And I think there's, if there's going to be that equal FOMO into it, I don't think we should FUD out of the project, and we should focus on the real benefits that Bitcoin offers to the world, right? And the long-term vision, right? Because Bitcoin hasn't changed. It's just as equal in its functional value as it was at 7,400, as it also was at 10,500. It's short-term market moves. And what's nice is that you're still at a 33 to 35% correction. Still not a bad deal. Anyways, now a few other things that I want to go and talk about in the close off. I know many of you are probably waiting for me to talk about it, and I will, because I'm always fair about talking about where I get things right and also wrong. Bitcoin dominance has absolutely climbed over the last 24 to 48 hours in the same period of time. We're pretty much back to where we were in the late part of September. Now, of course, still a good distance away from the highs here. But I will say that if we don't see a turnover in Bitcoin dominance here over the next few days, if we continue to see Bitcoin get back to 10,500 and altcoins aren't following, it might be that we're not ready just yet. What I'm looking for, though, is for us to get above the previous highs here, right? The previous highs at 71.79, because if we're setting higher highs, then that would showcase a discrepancy in the trend. But for now, on the weekly, I haven't seen my indicators come through yet, right? The squeeze momentum indicator still dropping. Stochastic RSI has not come back in the neutral zone. And even though the divergence has lowered, we're still seeing no cross in the MACD. Okay, so we'll have to see, though. I have no idea, guys, what's going to happen over the next few days. I think anyone saying that they do is a little bit bonkers, because it's a crazy time in crypto markets. But I'm glad to be here with you guys on this journey. And I hope for those of you who are maybe holding Bitcoin that it paid off for you guys. And you guys are in it for the long term, hopefully. All right. Well, anyways, guys, I will be doing some videos over the next few days. I'm going to be attending the Litecoin Summit as well as the World CryptoCon. I'm here in Vegas for my first time. It's a very interesting place. It's a very beautiful weather today. I think it's going to be colder in the next few days. But I hope you are doing well wherever you are. And if you have something to say about this, guys, leave a comment down below. If you like the video, drop a like. It's always appreciated. But until the next one, I'll see you all in the next video. Stay tuned.